Good morning, patrons, and welcome back. Here is another JRSA report or sentiment analysis or whatever I'm going to call this thing that I actually haven't had time to figure out yet. We're going to go through all of the charts and talk about what they represent in terms of the current market, and hopefully what can give us an idea of where this next coming week is going to go. We're going to start with the human emotional sentiment analysis, because it is actually quite an interesting chart. Politically, yesterday was a very interesting day with the meeting between Trump and Putin. And the lead up to that clearly showed a high spike in greed with a high strength behind it. Whether or not you believe the meeting was successful or not, the overall media presentation was that it was not what they wanted. They wanted a clear punish Russia for whatever, and that's not what Trump delivered. Whether or not that is the correct answer for what Trump did is irrelevant. From the standpoint of what this research shows, the media tried to push a narrative, and that narrative at this level didn't go the way they wanted it. The manipulation didn't stay according to what they had hoped they could achieve with the language and with the way they structured their reports. The saving grace for that meeting between Trump and Putin is that people could hear the words for themselves of what both individuals have said, and they can interpret the language themselves. The transcripts of that entire conversation is quite interesting. Of course, we will never know what was said behind closed doors, and I don't nearly believe it is a significant necessity that we need to. The venue is interesting, but it is also a rational point of view from what they were dealing with. So let's continue looking at this whole process. The human emotional sentiment is moving towards a neutral point, slightly negative. We can see that with the way the markets are progressing near the end of the cycle. And the strength isn't the push that was wanted. I don't think it's going to really matter one way or the other in the long term with regards to where this chart shows the media trying to go. I think we're going to see opportunities come up and do very well. So let's move to the next chart and see what we're going to do. But before we actually go to the next chart, I want to show you the current news cycle that has been pulled and analyzed. By itself, it is telling. What you see on the screen is the analysis of the news cycles on the basis of what has been the most impactful over the last 7 days. And by most impactful, I mean the most human emotional impact within the media. The very first item on this actually has nothing to do with Russia or Trump. It's disgusting and deplorable, but that is the point of the news cycle. They couldn't get the credence they've been trying to build up for. So they changed the script, trying to drive outrage to someplace else. We see the second and third areas are still beating the war drums, as they have to feed their masters for the military-industrial complex. Somebody has to make weapons, and there's money to be made selling weapons. So this drone is going to continue flying for quite a while as they continue beating it mindlessly into the ground, stoking every penny they can, before it gets to the point that the general public simply doesn't want to hear it. The impact of humanity in relation to the news cycles is really a psychological study in emotions and chemicals like oxytocin or serotonin. There are large swaths of information available publicly where studies have been conducted specifically in relation to how the news cycle affects human emotion. In turn, that can be directly demonstrated on how human emotion affects purchases, buying power, consumerism, and all the other fundamental frameworks of a society. We can see the emotional manipulation with technology. We can see how easy it is to manipulate an individual with the right words. And studies are being actively conducted deliberately to use AI as a manipulative tool for changing public opinion. I personally find this unethical. I have no problems with AI being used for research, providing counterpoints, and giving a different point of view. But any level of persuasive or manipulative persuasion, however you want to word that, is disgusting. The human being, you, should be able to decide for yourself based upon information you are given, whether or not something is right or wrong, or you believe it to be something that you champion. What I have seen is clearly and exactly what a lot of people have talked about for decades. And not just people like me working in the field of AI, but people in the field of technology. This goes back to a very well-known aspect of technology. Any technology, no matter what it is always going to be used by the government in the worst way possible. No matter how much that technology was built to save lives or make lives better, the first thing it's going to be used as is a weapon to kill or destroy. We can see this very clearly. One of the most graphic designs of this entire discussion is Albert Einstein's greatest work. The atomic age that Einstein envisioned was an age where people could have power at an unlimited cheap rate. The entire point of the atomic age wasn't to go out and kill people. Einstein believed his work would bring good to people, would bring our society to a point where electricity was no longer an issue. It would bring an age by which we could prosper. His work was turned into a weapon, and that became his greatest regret. Even on his own deathbed, many close to him suggested that he openly spoke about making the atomic bomb. He spoke against how it was used, and he regretted his participation in the lives it destroyed. Everything he wanted was thrown away by somebody that didn't give a damn about humanity. Unfortunately, modern AI is not that different. It has the potential to bring incredible good into the world by people who truly understand the value it has. I've talked several times about the good this technology represents, about being able to understand our past, being able to use our past analytically to help us build a better future. I've talked about how AI actually does help dyslexics, people with vocal problems from cancer, neuromuscular diseases, or other situations. There is a multitude of ways that AI brings good value to our race. And then there's the government. Then there's the rich, greedy bastards that don't give a damn. And they are hell-bent on using it to weaponize and enslave humanity any way they can. We have to resist that. And it's not necessarily through violence or activism or criminal intent. It's simply through knowledge. The first level of resistance is knowing that these machines don't act on their own. They don't make decisions on their own. They don't even understand the words that are processed. When they see a screen like this, it's just numbers. Your brain and my brain, we see words, we see meaning. They don't. We are the front line of being able to make sure this technology isn't corrupted and tainted with a vile evilness that can destroy our race. And the sad part of it is it's not the technology. It's the person wielding it. I've used this analogy countless times. A hammer in the hands of a master craftsman can build a house. A hammer in the hands of a psychopath can commit murder. The problem isn't the tool. The problem is the person holding the tool. That is the problem that we face in our society. AI is just the latest of that symptom, of that issue, but not the only cause. So now that we've really dealt with the human emotional aspect, let's get into the financial aspect, the markets themselves, and see what they say. The forex market has been flatter than my walls, to be quite honest. Overall, the volatility has been abysmal. There's really been no real movement for quite a while. Trading has been very slow and very tediously difficult. And we really can see that on the charts. We can see that in the fear and greed and in the strength of movement. It's, well, next to non-existent. Even when you look at the actual movement strength as a whole, when you look at the entire chart, just because we have a lot of movement between fear and greed, meaning more pairs exhibiting a greed state versus a fear state, or vice versa, the actual physical strength of the market movement itself is lackluster. To be quite honest, around August 2nd, that's the only high point in the market that we really see. The rest of the forex market has been disappointing, to be honest. From the standpoint of a volatility trading mechanism, this market is disappointing. Even with an aggressive pair like Euro USD, as I demonstrated in my last video, it isn't doing very much activity. I feel like I want to go get a stick and poke it just to get something out of it because it's sleeping. But in a way, though, a lot of that might be good. Simply because if the financial markets that control the monetary system of countries isn't responding to the showboating of the political scene, then that's a good sign. That means that somewhere along the lines, somebody has a head on their shoulders and is actually thinking about the consequences of this idiocracy that we now live in. It's not good if you're trying to trade or make any money trading, but it's good in that it doesn't have any major pushes or huge money flows in one direction or the other, indicating a large purchases or an extreme amount of selling. So that's good financially from the forex market. No major movement between the pairs. Now let's go and look at the next chart. The stock market has been quite interesting lately, as it's been showing most of the major indexes are pushing towards a greedy state. Money is moving into the stock market. This is an indicator of consumer sentiment. That's good, really. Consumers are happy with the way things are going. Things are looking positive, where they feel confident to be able to make larger purchases. That is a really good sign. So from the standpoint of this point of the market, when we take a look at the previous components, we can see that even though the countries are remaining neutral, not a lot of money moving, the media is pushing a fear angle, but it's not working. This directly divergent of the media. People are seeing hope that their economic situation is likely to improve. That's a good sign. From the standpoint of this economic situation, the stock market really does offer an invaluable insight into the consumerized section of our money flow system. But now let's take a look at the hyperactive spectators, the people living on the edge of the market, chasing their dreams, going broke or going home in the process. They are the ones that really are the forefront. Okay, here we are. The 7-day crypto market. This looks like a druggie on the loose, to be honest. It is completely scattered with up-down cycles of adrenaline highs. Nothing overly concrete as it swings back and forth wildly. Now remember that the financial markets are taken from the actual assets. In this particular case, this chart is based upon 1,300 different assets. Real numbers, calculated and processed. So we can see just how wild this month has been, and just how back and forth the adrenaline junkie process has been in terms of the movement. But the truth here is really the devil in the details. The part that really anchors this chart isn't what the fear and the greed is. It's the level of strength that is actually being exhibited. The highest movement has actually only been 1%. If the market in general is only moving 1%, and not even that way on the negative side. It shows that the market really doesn't have a lot of push one way or the other. The strength of the market is a clear indicator of the mindset of the representative assets. That is, it's not necessarily that it's pushing for a greed state or a fear state, unless that strength is maintained. And we could see for the last month or so, for the most part, we have remained pretty close to a neutral basis in the strength of the market itself. The crypto market is a Wild West market. It is insane in terms of volatility, and yet, for the most part, it remains reasonably neutral. That is actually very telling. You see, it isn't just the final value of fear and greed. And this is true for every single chart here. When you look at fear and greed and you see just one number, it's really a misrepresentation of the history and of a trend. You can't really guess or gauge exactly what the market is really doing just based upon that one number. It's not a practical assessment to make a financial decision. For the cryptocurrency market, let's take and actually look at this in a closer perspective. Okay, for the cryptocurrency market, we are looking at the 1-day chart. That is, these statistics show 1 day worth of data. Each point represents 24 hours of data plotted. And here it definitely does look like a drug-induced psychopath on the loose. But the part that really is important is, again, the strength. The strength of the market is a clear, defined indicator of what the market is doing. We have a few standpoints, a few places where the cryptocurrency market really showed some incredibly powerful moves. But for the most part, when we look or examine the strength, we can see it is pretty much very close to or returns to a neutral balance, even though the actual chart looks psychotic. It looks crazy. This is a dopamine hit on steroids. But the truth of it is, despite these wild moves between fear and greed, the actual strength of the underlying market doesn't show it as clearly. It doesn't show the insanity that the media often projects. And that's really how we can look at this chart effectively. When we see fear and greed, we see media manipulation because of the wild insanity of the extremes. But then people take a step back. They begin to rationally think about the real consequences of their investments. And then, all of a sudden, the rubber hits the road, and they begin to realize maybe the situation that got them going to begin with isn't as severe as they thought. So instead of selling everything in a blind panic, they might split their holdings. They might reduce their risks, or some other mechanism that isn't a chaos state. And that really is the point, I think, that these charts best represent. I think that is also the point that as we continue to look at this market, as we continue to examine all of the markets combined, we see that resonating philosophy throughout all the financial markets. People are going to give knee-jerk reactions, but when they put their money down on the table, that is not necessarily going to be a knee-jerk reaction. It's going to be controlled to some degree. It's going to be a little more realistic in terms of the amount of money they are really putting out there. So that brings us to what to expect for the next week. Given what we can see realistically between all of the markets, I think that's a good question, and it really depends upon the overall analysis. For this part of the video, I'm going to use the Jackrabbit sentiment analysis on the one-day rolling average. It's the most psychotic of all the charts, and it's also the most indicative of what I think might be a reasonable context of the coming week. I think the general direction isn't going to change that much. There's some level of optimism in the market, but mitigating circumstances from inflation, unemployment, and other aspects of real-world living are going to still play on the minds of people. I think the strength of those movements are going to have a consequence. For example, if we look at the one-day rolling average, we can see that there is significantly high levels of reasonable activity. But as we look at this, particularly at this first part, I drew these kind of angled and squared for a reason, because I think they represent the gross or overvalued look of the market. The last part I drew curved because I think it's really the representation of the market. Overall, what I see in the market is simply a normal cycle. That's really what I think this next week is going to bring. There's going to be some high points. There's going to be some low points. But I think overall, we're going to have a normal, neutralized cycle. I don't believe that we're going to see a lot of major activity. And I can actually base that on the 30-day cycle. The 30-day cycle has pretty much no activity whatsoever. And even the differencing between fear and greed is so minimal near the current date today that it isn't even that appreciable. We can see the flatness and the stability of the market. It's not that the strength is necessarily 20% on the fear side. That's important because that shows an overall assessment of the mental state of the public. But what is important is the changes. How much does this change day to day? And we can see that it's really not changing. It's remaining fairly consistent. So even though the general public has a heightened awareness on more of a fearful perspective, that awareness isn't getting worse and it isn't getting better. It's remaining consistent. So in terms of this next week, I think we can assume in a reasonable and educated approach that the markets are going to be pretty similar to what they were last week. You're going to have some opportunities, but you really need to be cautious about your opportunities. An exit plan, a worst case scenario, keeping track of the important news. And of course, that becomes questionable and debatable, but the evidence would be more in line with what drives the economy, things that actually matter, like the economists saying that the United States tariffs are bringing in roughly $50 billion in profits to the country. That's a significant improvement financially. And it's that kind of news that's going to spark real market movement, both in the forex and the stock markets particularly. I don't expect the cryptocurrency market to change, but I do think that both the stocks and forex markets may have some slight level of increase with that kind of news. We'll find out more when the Monday cycle starts. But for the most part, for the practical part of what we see, caution is definitely in order. Let me know what you think about this market. How has your trading been? Have you done well? Has it been aggressive? Which side has worked well for you? Have you done better on the long side or the short side? Share your thoughts. Leave a comment. If you have any questions, please feel free to ask them. Thank you again for allowing me to be able to conduct this kind of research as my patron. Thank you for watching.